Most people will never build real wealth from investing. Not because the market is unfair, not because they started too late, not because they did not have enough capital, because they never had a framework. Welcome to the ProfitByFriday.com podcast, where we replace guessing with process, emotion with discipline, and noise with one clear idea every single week. Let us get into it. In 2019, a man named Marcus sat at his desk in Chicago and watched an Investor Day presentation. The CEO of Tesla stood on stage and made a promise: 1 million fully autonomous robotaxis operating on public roads by the end of 2020. Marcus ran the numbers. He did the math. He bought the stock. That was 7 years ago. The robotaxis have not arrived for ordinary consumers, and yet, today, Marcus is still holding, and he has not sold. How is that possible? How does a stock keep rising when the promises that drove the buy never arrived on schedule? That is what this episode is about. This is not a Tesla problem. This is an investor understanding problem. Most retail investors think stock prices move on news. Earnings beat, stock goes up. Deadline missed, stock goes down. That is not how it works. Not for companies like Tesla. And not understanding this has cost more investors more money than almost any other mistake in the market. Tesla is not priced on what it earns today. Tesla is priced on what investors believe it will earn in the future. When Elon Musk announces a new frontier, robotaxi, humanoid robots, full autonomy, the market does not wait for delivery. It prices in that future immediately. The stock rises not because earnings grew, but because the dream grew. And when a deadline moves, the market does not cancel the dream. It reprices it forward in time. The dream survives. The date changes. The stock holds. Think of it like a construction project in your neighborhood. A developer announces a luxury apartment tower on the empty lot across the street. Property values nearby increase immediately, not because the tower exists, because the future the tower represents exists in the minds of buyers. If the developer pushes the completion date from December to March, values do not collapse. The tower is still coming. The date moved. The value held. Tesla investors are buying the apartment tower announcement, not the completed building. Before we go further, we need to state something plainly. Elon Musk is one of the greatest builders of his generation. Not because people say so, because the record says so. In 1999, he built PayPal from scratch and changed how money moves online. Sold for $1.5 billion. He was 30 years old. In 2002, he invested $100 million of personal capital into SpaceX when every aerospace institution said a private company could not reach orbit. They were wrong. In 2008, after 3 failed launches and near bankruptcy, Falcon 1 reached orbit. The experts were proven wrong. In 2015, Falcon 9's first stage landed upright on a drone ship in the middle of the ocean. The credentialed consensus called it impossible. The physics disagreed. In 2017, Tesla passed General Motors and Ford in market value, a 12-year-old company building a fraction of their combined output. That record is real, and it is the foundation that makes every promise he makes credible to the market. Now, here is what the record also shows. The New York Times analyzed more than 600 public statements and investor calls that Musk has made over his career. Fewer than 1 in 5 were delivered as announced. In 2015, his delivery rate was close to 75%. By 2020, it had fallen below 50%. The direction is consistent, and it is going the wrong way. This is not because he is becoming less capable. It is because the targets are becoming larger. Every time he proved the impossible, the market raised the bar. Bigger promises take longer. The delivery rate falls. That is a geometry problem, not a character problem. And no single area shows this more clearly than full self-driving. The promise that has defined Tesla's premium valuation for a decade. 2015, complete autonomy in approximately 2 years. 2016, autonomous driving described as a solved problem. 2019, 1 million fully autonomous robotaxis by end of 2020. 2023, Musk publicly described himself as the boy who cried full self-driving. January 2026, admitted that Hardware 3 vehicles cannot run unsupervised self-driving without a hardware upgrade. Owners who paid up to $15,000 are still waiting. April 2026, consumer full self-driving pushed to the 4th quarter of 2026 at the earliest. 11 years. No consumer available unsupervised full self-driving. As of late 2025, Tesla was valued at approximately $1.46 trillion. Fortune magazine tracked what they called the Musk Magic Premium. Their analysis found that Tesla's current business, its actual cars, its actual energy storage, its actual service revenue justified approximately $110 billion of that valuation. The remaining $1.35 trillion was the price investors were paying for promises that had not yet produced material revenue. Robotaxi, humanoid robots, full autonomy. economy, a future that exists in announcements but not yet in earnings. Not every missed promise hurts the stock. The market distinguishes between a delay and a fundamental admission. Delays get absorbed. Fundamental admissions produce price events. Battery Day, September 2020. Investors expected two specific announcements. They got neither. Tesla fell 7.5% in a single session. More than $30 billion erased in one day. October 2022. The Twitter acquisition. The stock fell from above $400 to $100 per share. Tesla's actual revenue grew 51% over that same period. The stock collapsed not on fundamentals, but on narrative risk around the CEO. January 2026. The Hardware 3 admission. Owners who paid $15,000 for full self-driving were told the hardware in their car cannot support unsupervised driving. Not a delay, a fundamental admission. The stock slipped after hours. Now let us talk about the pay package, because it tells you something important about how Tesla's governance works. In 2018, Tesla's board granted Musk options on 304 million shares tied to milestones requiring Tesla's value to grow from $59 billion to $650 billion within 10 years. At the time, some called it a publicity stunt. Musk hit every milestone. In January 2024, the Delaware Chancery Court voided the package. The ruling described the process as deeply flawed. The package at that point was worth approximately $56 billion. In December 2025, the Delaware Supreme Court restored the package. Due to Tesla's stock appreciation, it was now worth approximately $139 billion. The milestones that justified the largest individual pay package in corporate history were set by a controlling shareholder in a process later found to have compromised board independence. Investors evaluating Tesla are also evaluating that governance structure, and now that same model is arriving on a larger stage. SpaceX is transitioning to public markets. A supervoting share structure locks in Musk's control, regardless of what public shareholders vote. The valuation being asked requires Starship at full commercial scale, orbital data infrastructure, and the deep space economy to materialize on a timeline that justifies paying many multiples of current revenue today. These are promises, and the documented delivery rate on Musk's long-duration promises across his full public record is below 35% within 1 year of their stated target. Marcus is still holding. The robotaxis have not arrived. The full self-driving has been delayed more than 10 times, and he has not walked away. Both things are true simultaneously. The question Marcus needs to answer now is not whether Musk will eventually deliver. He probably will, in some form. The question is, does the current stock price already reflect 10 more years of delivery? Is he being paid to wait, or is he paying to wait? There is a difference, and the framework that answers that question is not based on faith in any single person. It is based on what the business earns today, what it has earned consistently, and what multiple you are paying for that consistency. The businesses that compound quietly in the boring legacy framework do not need to outrun expectations. They set modest targets and beat them every year for 30 years. No announcements, no deadlines, no promises, just compounding. That is a different kind of extraordinary, and it does not require faith in any single person's ability to deliver the impossible on schedule. Amateurs buy the dream. Investors price the gap between the dream and the stock. Visit profitbyfriday.com today. Subscribe free to the Friday Flash, where you will receive one stock fully evaluated through the clear framework every Friday so that you know everything about the company before you decide to invest. No noise, no hype, just the analysis that matters. We trade for cash flow, and we invest boring to build legacy. See you in the next episode. Bye for now.